Meta and Microsoft are reporting after the bell today to give investors more insight into spending for hyperscaler. In the meantime, CapEx on infrastructure and AI-related infrastructure is expected to soar. McKinsey estimates that data center investments will reach $5.2 trillion by 2030. In the middle of that trend sits Stonepeak, with about $90 billion in AUM, making it the largest independent pure-play infrastructure specialist. Mike Dorrell is the CEO and co-founder of Stonepeak and joins me now to take a look at the big picture. Mike, so great to see you. Thank you for joining.
Great to see you.
Look, Stonepeak is so interesting because obviously you have this huge digital infrastructure business, but you also have energy, you have transport too. I wonder, how has the business mix been shifting with this mega trend? What is kind of the divide between what you're doing in sort of the new world of digital infrastructure and the sort of more traditional pure play infrastructure?
It's so fascinating because for years and years, we've had a big emphasis on creating assets, especially in power and especially in digital. And what we found over the last year or so is those huge businesses are now coming together. And what I mean by that is all our skill set in power and going and getting on the grid and developing power, all of a sudden, all the tech players want that. So those two industries and skill sets are really coming together.
So it's helpful that you were already there before this even emerged. But I wonder, with so much capital rushing into this world, whether it be energy or AI data centers, what does the rest of the outlay look like? Can you find things at a bargain because capital is crowding into places that aren't the traditional infrastructure type projects?
In short, yes, but it's not lost on us that the market is at almost historical highs at the moment. You have to go all the way back to the dotcom era to have anything comparable to today. So that's not lost on us. But to go and build these data centers and to get access to the power and all the permitting and et cetera, that is such a unique skill set that for those out there that have that particular skill set and can build these data centers and can build this power, I think it's a really unique moment in time. And of course, you go and get long-term offtake contracts with the Googles and the Microsofts, et cetera. Like, I don't want to make a bet on whether these valuations are going to last long-term, but I'm very happy to make a bet that Google's going to be a survivor and Meta is going to be a survivor. That's a bet I'm very happy to make.
Does the fact that we have these long-term contracts mean that this time is different? That when the alarm bells go off in your head and you say, I haven't seen this since the dot-com bubble, kind of assuage fears? Or do you think still this market is way too frothy and maybe putting the long-term contracts aside, there needs to be some sort of reckoning or correction?
A little bit of both. There's a lot of similarities for sure between dot-com and today. It's a bunch of huge mega firms jockeying for position, and so there's going to be winners out of that. And we're going to look back and say the winners were unbelievable bets today, but there's going to be a bunch of losers as well. But where it differs from the dot-com era from an infrastructure standpoint is data centers with long-term contracts are night and day different from fiber back in the dot-com era, because they're the two big infrastructure bets of the time. So I do make a big distinction between those two categories.
Well, one of the things that, again, has echoes of the financial or the dot-com bubble is the circular financing, all of it. It was a discussion we had to start the year. It seemed like it got quiet, and then it starts up again with us learning to start the week that NVIDIA is discussing a $250 billion backstop for OpenAI in one of their data centers. Does that aspect concern you, just how reliant customer and supplier seem to be on each other?
It doesn't concern me, but you have to take it into account. So there's nothing nefarious going on. What's happening here is you've got 5 or 6 of the biggest companies in the history of the world who are all fighting for relative pricing power or bargaining power amongst each other. So NVIDIA doesn't want to be beholden to just Google and Microsoft and AWS buying its chips. And so it's trying to fund all these other parties who can be customers of NVIDIA. So for sure, if you're an NVIDIA investor, you want to be very aware that some of these revenues coming back to NVIDIA are circular. But at the same time, I think, again, if you're an NVIDIA investor, you want them going and creating a bigger marketplace for themselves. So NVIDIA is doing it in a very, very logical fashion, but it does mean you've got the circularity going on.
So if you are to look at the areas that are less safe, that do look a little bit bubbly, that do look a little frothy, what are sort of the characteristics of things you'd look out for?
The thing that really focuses my attention is the need for capital at the moment, and there are certain companies that are cash flow positive, although there's fewer and fewer of those. So yeah, Google,
learned that from,
and Microsoft.
I was going to say, Alphabet, though, cash flow negative for the first time last earnings.
You're right, but if Google wanted to get cash flow positive next year, could do it very, very easily. Right. So those folks, I'm not saying there won't be rough roads ahead at some point potentially, but they're going to be fine. The folks you would worry about are those who really don't have internally generated cash flows. And that's obviously the big AI labs today. And that's where, you know, if you're betting on those, you kind of like they've got this big brother in the sense of NVIDIA to come and look after them, because NVIDIA does not want those guys to fall over. But my big concern would be, as an investor, if the capital markets shut off, because this is what will end it. The capital markets will shut off. Those who need capital but can't get it, like, what are they going to do? They're in some difficulty. Those who've got internally generated capital will just forge further and further ahead.
Are we starting to see the beginning signs of that? Because spreads have started to widen in public debt markets for these big tech players. Do you see finally some pressback, and pushback from this market on the financing side?
Not a lot.
Okay.
Not a lot. You are right. Spreads have gone out a little bit, and certainly the market is looking at all this CapEx spend, and you don't need to be that bright of a finance person to see that this can't go on the way it's currently going on forever. But I don't at the moment. I mean, CapEx plans this year, I heard you mention earlier, are close to $750 billion. Next year, over $1 trillion. So I don't see a pullback currently. I don't see a pullback in the market currently, but that's what I would be watching pretty closely.
There's always the political element to it, and infrastructure to some degree always is, especially if you're doing public infrastructure. There have been states that have been trying to enforce moratoriums. New York, one of the first successful ones, but just looking at the list, Maine, Vermont, Oklahoma, Maryland, Virginia, Georgia, that don't want data centers, some NIMBYism. What happens if more states are successful? Does it kind of complicate the projects that you're trying to undergo?
It complicates if it kept going the way it's going. So New York's the only state to announce a moratorium today. And it's been, last time we were here, which was maybe 3 or 4 or 5 months ago, we spoke about the likelihood of politics becoming an issue over time. It wasn't even mentioned, you know, when we were talking, and now it's topic du jour, really. So what we're seeing is people don't like power prices going up, but I also think there's a huge, frankly, just social concern of what's AI going to do to my life and my job. And if you go and talk to politicians around the country, all of them are being advised to be anti-data center at the moment. On the other side of that, you go and look at the geopolitics of, you know, the AI competition with China. There's no way the US wants to fall behind. So you've got this two very fast approaching trains just about to collide into each other. So I don't think the New York thing alone is a big deal. There's not a whole lot of big data centers in New York. It's a 1-year moratorium. Right. But if Pennsylvania banned it, or if Virginia banned it, or Ohio banned it, or Texas banned it, then you would see some repercussions.
Right. Mike, I just got to ask you, while we're on the topic of politics, and again, a lot of infrastructure does end to be political. I know Chicago is pushing back the city council on one of the investments you want to make because they're concerned around one of your holdings, Omni Air, which is involved in a lot but does have a little bit of exposure to ICE deportation flights. Executives have talked about selling that particular portco. Are you selling it? What are sort of those discussions looking like?
Our plan was always to sell Omni. So we bought a company called ATSG. Huge, it's the biggest domestic cargo company in the US. We love it, it's been a great investment, but we always plan to get rid of Omni. I don't want to get involved in politics. I don't want to get involved in controversy. It's nothing to do with that. It was always the plan to sell ourselves.
So that's just proceeding ahead as planned.
You got it.
Got it. So finally, before I let you go, as I mentioned to start this, I mean, you're kind of like one of the last big pure play infrastructure players. Everyone else is getting bought up, whether it be GIP and BlackRock or SoftBank buying DigitalBridge. How often is your phone ringing, Mike, with people saying, "Hey, nice business you got there. Would you like to come join us?"
All the time. But I love what I do. My partners love what they do. We're not selling the firm.
Yeah, so no plans to, even though, would you ever buy anyone then? Or like that would expand beyond infrastructure? Or you just want to stay pure play infrastructure?
I mean, we'll see where it goes. We've got a lot of cash on balance sheet, but it's a frothy market today. We need the market to tone down a little bit. But I think if you're cashed up and the market tones down, you go and spend that money somehow or other.
What might you want? Where are gaps that you see that you might want to fill?
Who knows?